The differences between Deutsche Bank and Credit Suisse. Deutsche Bank AG became the latest focus of the banking turmoil in Europe as ongoing concern about the industry amid a slowing economy sent its shares plunging. Bloomberg's Stephen Ahrens explains the differences between Deutsche Bank and Credit Suisse. Deutsche Bank shares, dbkgn.de, tumbled on Friday after the cost of insuring the bank's debt against the risk of default shot to more than 4-year highs, highlighting concerns among investors about the stability of Europe's banks. The region's banking sector has had a rough ride in the last week, with a state-backed rescue of Credit Suisse and turmoil among regional U.S. banks fueling concerns about the health of the global banking sector. Deutsche shares, which have lost more than a fifth of their value so far this month, fell by as much as 14.9% on Friday to their lowest in 5 months. The shares were last down 13% at €8.13, $9.16. Germany's largest bank has seen $3 billion wiped off its market value in the space of just a week. Deutsche Bank's credit default swaps, CDs, a form of insurance for bondholders, shot up above 220 basis points, BPS, the most since late 2018, from 142 BPS just 2 days ago, based on data from S&P Market Intelligence. On Thursday, Deutsche CDs had their largest one-day gain on record, based on Refinitiv data. But they remain well below highs of close to 300 BPS logged during the Eurozone debt crisis in 2011. CDs for major European banks rose across the board on Friday, reflecting investors' reluctance to carry any risk on their portfolios going into the weekend. Deutsche Bank has been in the spotlight for a while now, in a similar way to how Credit Suisse had been, Stuart Cole, head macroeconomist at Equity Capital, said. It has gone through various restructurings and changes of leadership in attempts to get it back on a solid footing, but so far none of these efforts appear to have really worked. The fallout from the wipeout of @1 bonds in the CS rescue has raised questions about a key part of bank funding, which makes the problems DB has been facing that much more difficult to overcome, Cole said. The STOXX 600 index of European banks, which does not include shares of Credit Suisse or UBS, has seen one of its most volatile weeks of trading in a year. The index was last down 5.1%, heading for a monthly decline of nearly 20%. Separately, Deutsche Bank said it would redeem $1.5 billion in a set of Tier 2 notes due in 2028. The bank had already issued similar new notes in February, which were designed to replace the notes that the bank is now redeeming.